Welcome everyone. This is Pinnacle Professional College, and this is a new session. Actually a continuation of our series on public sector budgeting. So we'll dive straight into the class, and please stick and stay with me. If you haven't subscribed to the channel, please do so. Just hit the red subscribe button below and you should be subscribed to the channel, and hit the notification bell as well, so that anytime we post a video, you'll be the first to receive it. So in our last session, we talked about the role of the different players in national budgeting. We talked about the role of the government. We talked about the role of the Minister of Finance. We talked about the role of the different players basically in national budgeting. Today we'll be continuing and we'll be looking at the role of the public. So the national budget, as we all know it, is a public process and must involve the citizens at each and every stage. Very, very crucial, right? The public makes inputs into the budget process. And this helps to ensure accountability, right? And someone may ask, how does the public make inputs, right? How do the public make inputs? Don't forget that the public is represented by members of parliament. The members of parliament who represent the different constituencies are representatives of the public, and they make these inputs on behalf of their people when it comes to matters related to the budget. Very, very important. Now let's talk about the guidelines for preparation of the annual budget. What are the guidelines for the preparation of the annual budget? The minister shall, subject to cabinet approval, issue guidelines for the preparation of the budgets for each of the financial year. Right? The minister shall, subject to cabinet approval, issue guidelines for the preparation of the budget for each financial year and circulate copies of the guidelines to each covered entity not later than 30th June of every year. Right? So the minister is responsible for issuing guidelines that surround the preparation of the budget every financial year. Now, what do these guidelines include? The guidelines shall include the economic outlook for the country. What is the economic future of the country? What is the finance minister projecting, or what does the finance minister see in terms of the outlook of the country economically? It will definitely include revenue forecasts. What is the potential revenue we'll be generating in the coming year, and where will we be getting these revenues from? What are the sources of these revenues? Number 3 will be fiscal targets. Now, anytime you hear fiscal, you must think two things, which is taxation and expenditure, or government spending, right? So fiscal targets in relation to the fiscal principles, particularly the need to achieve sustainable levels of public debt and fiscal balance, right? So fiscal targets, what do we want to achieve in terms of taxation, revenue, in terms of government expenditure, etc., public debt, everything relating to fiscal policies. Number 4, medium-term fiscal framework, including key assumptions. Medium-term fiscal framework, including key assumptions. Number 5, the multiple year ceilings for each covered entity in line with the fiscal strategy document. The multiple year ceilings for each covered entity in line with the fiscal strategy document. Right? So we are looking at what are the ceilings that we are looking at in terms of fiscal balances that would normally be in the fiscal strategy document. The fiscal strategy document, as we've already explained, is a document that outlines the fiscal policies of the government and how it intends to implement or execute them. 6, the ceilings on the required number of staff for each covered entity and the cost of appropriation for the relevant year. So what is the number of staff for each of the covered entities, and what will be the appropriation cost or the allocations to each of these covered entities? So we need to know the number of the staff, because it's the staff that will drive or do the work, for the government to achieve its goals. Number 7, the reconciliation of any change to the previous medium-term expenditure framework arising from discretionary policy changes, etc. So the guidelines will include the reconciliation of any changes to the MTEF, which is the medium-term expenditure framework. Are there any changes surrounding that as a result of, policy changes? That's something that the guideline will cover. Number 8 is the selection criteria for investment projects. The selection criteria for investment projects. Now, the government would undertake various investment projects, but what we need to know here in terms of the guideline would be the selection criteria. How does the government select the investment project that it intends to invest in? Number 9, the ceilings for the preparation of the budget estimates of local government authorities. So what are the ceilings? The ceiling is basically the maximum, the maximum numbers for the preparation or what the government is willing to allow in terms of budget estimates. So the ceilings for the preparation of the budget estimates of local government authorities, right? So this is very, very crucial. This is very, very crucial. You have the ceilings for the preparation of budget estimates. That's something that the guideline provides. Number 10 is the details of expenditure under statutory funds and alignment and coordination of statutory funds. So the guideline should give some details around expenditure, which is very, very crucial. We need some form of details of expenditure. Number 11 is any other information that is required from a covered entity to enable the minister prepare the annual budget. So aside all these things that we've talked about, from the economic outlook for the country to revenue forecast to fiscal targets to reconciliations to the staffing, etc., any other information that is relevant for the preparation of the annual budget must be included as well. It's very, very important. Now, let's talk about the annual budget. The minister, in consultation with the relevant stakeholders, prepare the proposed annual budget no later than 1st October of each financial year, right? So the minister would, in consultation with important stakeholders, not necessarily, should I say important, but relevant stakeholders, would prepare a proposed annual budget. And the timeline for that is it shouldn't be any time later than 1st October of each financial year. Then the minister will then go ahead to submit the proposed annual budget to cabinet, right? The minister will submit this annual budget to cabinet for what? They submit this annual budget to cabinet for approval. And there's also a timeline for that, no later than 15th October of each financial year. Number 3, then cabinet also goes ahead and communicates to the minister the decision of the cabinet on the proposed annual budget. First of all, the minister prepares the annual budget in consultation with stakeholders. Secondly, the minister will submit the budget for approval. Then the cabinet will communicate the decision on the proposed annual budget. And cabinet has a time frame of no later than 30th of October of each financial year. The minister shall, on behalf of the president, lay before parliament no later than 15th of November of each financial year estimates of the revenue expenditure of government, the annual budget for the ensuing financial year. So the minister takes this annual budget and lays it before parliament. And they basically estimate the revenue and expenditure of the government, right? So they'll take this budget, take to parliament, and for parliament to kind of discuss and debate on it. And this should happen no later than 15th November of each financial year. Number 5, the estimate of expenditure of all public offices and public corporations other than those set up as commercial ventures shall be classified under programs or activities in the appropriation bill to be introduced into Parliament. So like I originally said, right, when the minister takes the budget, the proposed budget to Parliament, it will have the estimates of revenues and expenditure for the ensuing year. This is very, very important. The annual budget shall be based on a couple of things, right? What are the things that are driving this annual budget? Number 1 is forecasts. And this forecast is typically based on macroeconomic developments, right? So when we say macro, we are looking at things from a national perspective, national and sometimes even global perspective, because sometimes global events have an impact on national occurrences. So sound analysis and forecast of macroeconomic developments and fiscal projections as well. Number 2, the annual budget shall be based on approved plans. So any plans that is intended to be executed in the coming year, the annual budget is based on that too. Number 3, the annual budget has to also be consistent with the fiscal strategy document. We've talked about fiscal strategy document a number of times. The annual budget must be consistent with that. The annual budget shall also indicate an update of the macroeconomic and fiscal projections in the fiscal strategy document, right? So what the annual budget will do is will give updates on, the fiscal projections and even the economic projections in the fiscal strategy document. The annual budget shall also indicate any changes in the projections as well. So what does the annual budget do? Number 1, it gives updates to the fiscal projections in the fiscal strategy documents. And number 2, it indicates changes in the projection of fiscal aggregates. It also indicates changes in fiscal targets as well, and ceilings. D, it sets out the recent trends and developments on the indicators of the economy. And E, it provides detailed information on recent fiscal developments. It's very, very crucial, very, very crucial. So the annual budget, in essence or in summary, indicates a couple of things, right? It gives updates on macroeconomic developments, number 1. And 2, it also gives updates on any changes that may have happened to projections, the financial projections of the fiscal aggregates that have been determined. It also sets out to show any recent trends and developments on economic indicators, right? And it also brings out any recent fiscal developments or forecasts for the period. So these are some of the things that you should note when it comes to the annual budget. The annual budget brings all these updates and changes and trends and developments that are necessary for understanding the entire macroeconomic context of the country. Now, there are a number of things that the budget indicates, but those are a few. So now let's move on to F, letter F. The annual budget shall also indicate the financing estimates. When we think budgets, you have to think about estimates, right? Because a budget is an estimate. A budget is an estimate. The budget is an estimate. So it indicates the financing estimates for the financial year. It also provides for the expenditure estimates for the preceding financial year, the current financial year, and the ensuing financial year, right? So the annual budget provides for expenditure estimates. It provides for financing estimates and it provides for expenditure estimates. And it also contains a statement of multiple year commitments. Commitments also mean allocations, commitments to spend, or monies allocated for a particular project, or expenditure. It contains a statement of the multiple year commitment. Now let's look at expenditure in advance of appropriation, where the president is satisfied that the Appropriation Act in respect of a financial year will not come into operation at the beginning of that financial year. The president may, with the prior approval of Parliament, and by a resolution and warrant addressed to the minister, authorize the issue of monies from the consolidated fund for the purposes of meeting the expenditure necessary to carry on the services of government. So there are situations where an expenditure needs to be made in advance of appropriation, right? In advance of appropriation. Now, what do we mean by appropriation? Appropriation is simply the allocation of budget amounts to specific expenditure. They are basically appropriating a pot of cash or a pot of money to certain specific projects. So there are times when expenditure must be made in advance of appropriation, right? And how is the process like? So it says, where the president is satisfied with the Appropriation Act in respect of a financial year will not come into operation at the beginning of that financial year, the president may, with the approval of Parliament. So this happens with the approval of Parliament, and it is done through a resolution and a warrant addressed to the minister, which gives him the power to carry on the services of government, gives them that authority to make that expenditure, which is necessary to carry on the services of government. So Section 23 of the PFMA 2016 describes all of that. Now let's look at budgeting on a gross basis. What is budgeting on a gross basis? The revenues and expenditure of government shall be entered in the annual estimates of revenue and expenditure on a gross basis, right? So budgeting here is done on a gross basis and not on a net basis, right? So the revenue expenditure shall be entered in the annual estimate of revenue expenditure on a gross basis without being netted with each other. So revenue and expenses are not netted with each other. They are entered in the annual estimates as revenue and expenditure and done on a gross basis. However, tax revenue shall be entered in the annual estimates of revenue and expenditure after deducting the estimated amount of tax refunds from the tax revenue. This situation is slightly different when it comes to taxes. Basically, that's what we're saying here, right? For taxes, tax revenue would only be entered in the annual estimates of revenue and expenditure after tax refunds have been deducted. Tax refund is basically tax that you have to give back, tax revenue that you have to give back to a taxpayer because they overpaid on their taxes. So tax revenue shall be entered in the annual estimate of revenue expenditure after deducting the estimated tax refund from the tax revenue. Now let's talk about commitment of approved budgets. Commitment of approved budgets. Initially, you heard the term multiple year commitment, and I explained commitment briefly, but I'm sure as I go through this, you understand it a lot better. Number one, after approval of the annual budget by Parliament, the minister shall, within 10 days of the ensuing month, issue quarterly expenditure ceilings in respect of the unapproved annual budget. In respect of the approved annual budget. The Controller and Accountant General shall, based on the quarterly expenditure ceilings, issue release funds to the principal spending officers of covered entities, right? So first of all, you need to understand that what the minister does is he or she would issue a quarterly expenditure ceiling, right? An expenditure ceiling is basically an expenditure, or the expenditure that is given to the different covered entities. And there's a ceiling for that. You can't overspend. You can't overspend. So the minister is issuing quarterly expenditure ceilings. Then the Controller and Accountant General, based on those expenditure ceilings, releases funds to the principal spending officers. So the principal spending officers are in charge of spending wisely the resources that they've been given. Then the principal spending officer shall commit the budget. So you see the word commitment here again. Shall commit the budget. Shall commit the budget. So someone might be asking, what does commit? What does commit the budget mean? A principal spending officer shall commit the budget. Shall commit the budget. So commitment is basically an obligation, right? An obligation to spend, essentially. An obligation to spend based on an approval, right? And in my previous lecture, I've talked more about the commitment basis of public sector accounting. The commitment basis of public sector accounting. But a commitment is basically an obligation or an approval to spend. Let me put it that way, an approval to spend. So a principal officer shall commit the budget of a covered entity based on the quarterly warrants issued under this section. A principal spending officer or any other public officer shall not commit government to a financial liability, including contingent liability, unless the principal spending officer is specifically authorized to do so. So the principal spending officer should not commit government to a financial liability. Right? To a financial, and this is very, very crucial. This is very, very crucial. The PSO should not commit government to a financial liability. That's the whole point of spending resources wisely. Now let's move on to commitment of approved budgets. A commitment in respect of staff recruitment shall, subject to financial clearance by the minister, be within the limits set by Parliament under Section 21. So number 6, and this is where you might understand commitment better, where a covered entity enters into a contract or any other arrangement that commits or purports to commit government to make a payment, right? A commitment is an obligation to pay for something. It's just like, it's basically a financial obligation, I think that is a better way to express it. So when people say, oh, I have this commitment to make, it means they have an obligation. I have this financial commitment to make. It means they have a financial obligation. So where a covered entity enters into a contract or any other arrangement that commits or purports to commit government to make a payment, the contract or arrangement shall be approved by the principal spending officer, right? It's very, very important. And the principal spending officer will enter that contract into the GIFMIS, which we've talked about very, very much. Number 7, subject to parliamentary approval, the minister shall grant clearance before a covered entity signs a multi-year contract. Sometimes there will be multi-year commitments, right? A multi-year commitment is a multi-year financial obligation. We said the commitment is a financial obligation. Number 8, the minister shall, in accordance with spending plans approved under Section 22, approve commitment. So you see, approve commitment. So approve financial obligations or approvals to spend money on something. To approve commitment subject to the availability of sufficient unencumbered or uncommitted appropriation on the expenditure ceilings in respect of that commitment. So the minister approves commitments. He approves commitments. Now let's talk about the expiration or the expiry of appropriation. Appropriation approved by Parliament shall cease to have effect at the close of the financial year. Right? Remember that an appropriation is basically a budgetary allocation. It's basically a budgetary allocation, right? And if you are given a budgetary allocation and you do not spend everything, then any balance of monies unexpended from the consolidated fund or from any other public fund by the close of year shall elapse. It shall elapse by the 31st of January of the ensuing year. Right? If you do not spend the money, then by the 31st of January of the coming year, you basically lose the right to spend the money. So appropriations do expire, basically. Then you have the term we call environment. Now, this is a very, very important term when it comes to public sector accounting. This is a very, very important term. This is a very, very important term, and I'm sure you might have heard the word environment. Now, environment is basically the transfer of funds from one budget to another. So you might have surplus funds in one area that is able to accommodate or take care of a potential overspend in another area, right? But let's delve into this a little bit. The minister may, on the request of a principal spending officer, execute environment in respect of an amount of money allocated to the covered entity of that principal spending officer. Environment executed under subsection 1 shall not result in a future liability for that covered entity or the government. So what are the conditions under which environment would be allowed? What are the conditions? Environment executed under subsection 1 is subject to the following conditions. Environment of funds allocated for wages and salaries in an expenditure vote shall not be made unless the environment is in respect of wages and salaries within that expenditure vote, right? So environment must be in respect of the expenditure votes, right? Must be within the scope of the expenditure votes. Very, very important. Environment that involves a change in the spending plans approved by the minister shall require the prior written approval from the minister. So in case there's any change in spending plans, right, that would require prior written approval from the minister. C, environment may be made from a recurrent expenditure to capital expenditure, as well as from one capital expenditure to another capital expenditure, but shall not be made from a capital expenditure to a recurrent expenditure. You do not make environment from a capital expenditure to a recurrent expenditure, but you can do it from a recurrent expenditure to a capital expenditure, or even a capital expenditure to another capital expenditure. Environment shall not be made in respect of appropriated amounts between covered entities without the approval of Parliament. So you do not make an environment without the approval of Parliament in a supplementary estimate. It's very, very important. So what are we saying here about environments? What are the conditions, the general conditions? I've talked about a lot, right? One of the things that you need is that when there's a change in spending plans, it needs a prior written approval from the minister. Environment cannot be done from a capital expenditure to a recurrent expenditure, right? Environment is also in respect of wages and salaries that happens within the scope of the expenditure votes. Very, very crucial. Now, let's look at the content of the national budget. What is the content of the national budget? What is the content of the national budget? What is the content of the national budget? What is the content of the national? The content of the national budget of Ghana is not strictly defined by any law or regulation. However, the various budgets prepared and presented under various administrations suggest the content of the national budget as follows. So, what is in the national budget is not strictly defined by law or any regulation, but we've seen in the past how the national budget have been structured, and so we are going to glean some insights from that. Number one is the objective of the state. The objective of the state. This is the aspect of the budget where the government's short, medium, and long-term objectives are communicated to the public, right? So what is the objective of the state? What are we trying to achieve? What is the short, medium, and long-term goals, right? And this objective should be consistent with the national policy and the constitution of the country. For instance, in Ghana, the objective of the 2013 budget statement of Ghana was sustaining confidence in the future of the Ghanaian economy. Sustaining confidence in the future of the Ghanaian economy. So that was the objective. That was the objective. Now, the content, as we already said, the content of the national budget is not defined by any law or regulation. So another content that we've seen in the past that is usually under discussion is fiscal policy. Now, I've always mentioned that when you think about fiscal policy, you must think two things. Number one is taxation, and number two is government spending. The national budget will contain policies around government spending, what the government intends to spend on, why it intends to spend on that, and what are the benefits that will accrue if we make those expenditures, right? So that's on the public or the government expenditure side. Then on the taxation side, this talks about revenue generation. So issues under discussion would be efficient tax collection mechanisms, sealing any tax loopholes, whether to increase or decrease taxation to drive, economic activity, etc. All these are fiscal policy issues that are discussed in the national budget. Then you also have the monetary policy. The monetary policy. This is the aspect of budget where government makes its intention known on how money supply is going to be. So when you talk about monetary policy, you are talking about the supply and demand of money here, the supply and demand of money. So what happens if the supply of money increases? What happens if the supply of money decreases? And the government has a lot of economic tools at its disposal to be able to influence money supply, right? Things like interest rates, inflation, exchange rates, etc. That it has at its disposal to be able to influence monetary policy. Number four is budget estimates. Budget estimate is basically a quantitative estimation of the projected revenue and expenditure for the budget period, right? So we want to understand the content of the national budget. One of the things that is key, the national budget, is what the projected revenue will be and what the spending will be. And those are estimates. Now let's move on to other other issues as well. Let's discuss the processes in the budget cycle. What are the processes in the budget cycle? So number one is the budget formulation. The Ministry of Finance issues what we call a budget circular. They issue budget circular, budget guidelines, which we've talked about, and instructions to the various head of departments. And the heads through the budget committees will review and prepare their strategic plans, estimated revenues and expenditures for their budget periods. Right, so the Ministry of Finance will issue budget guidelines, and the heads of departments. So these guidelines are issued to the various head of department. The head of departments will pick on these guidelines and then will prepare their strategic plans through the budget committee, through budget committee review, Then the heads submit their plans and estimates to the Ministry of Finance through their sector ministers. And we've discussed this process briefly in prior videos. So if you haven't watched that, please go back and watch that. The principal spending officers are called for a budget hearing to defend their plans and estimates, right? So the principal spending officers will be called for basically a budget hearing, and they have to defend their estimates. The Ministry of Finance will consolidate the budget and submit the budget to the cabinet for review and approval. The final national budget is prepared and signed by the president. So the first step in the budget cycle is budget formulation. And this consists of the issuance of the budget guidelines, the heads of departments preparing their strategic plans, and submitting it to the Ministry of Finance. And also basically the principal spending officers having to defend their estimates. The Ministry of Finance then goes ahead to consolidate the budget, submit it to the cabinet for review and approval, and the final budget is signed by the president. Now, number two is budget authorization. The final budget is submitted to Parliament, right? Submitted to Parliament. It's laid before Parliament in the form of appropriation bill and finance bill. Then Parliament would look at the budget, debate the budget, and approve or disapprove it. Very, very important. Number three is implementation or execution. Once the budget has been approved, right, it has to be implemented, right? And the implementation is on two fronts, the collection of revenue and the disbursement of expenditure. The Ministry of Finance issues warrants and cash release instructions to the Controller and Accountant General to enable him to make the commitments and disburse funds. Very, very important. So after the budget is formulated. 2, the budget is approved. 3, the budget is implemented. Number 4, the budget has to be monitored, evaluated, and controlled. Now, when the budget is laid down and everything, now the budget has to be tracked. It has to be monitored to make sure that we are spending or we are receiving revenue according to plan. According to plan. It's very, very important, right? When you don't do implementation without doing monitoring, right? So that any corrective action could be taken. If you're not tracking the budget, if there are budget overruns, you can't track and correct, you can't track and correct. Now let's talk more about, in continuing what we are talking about, let's talk about supplementary estimates. Let's talk about supplementary estimates. Supplementary estimates. It is prepared when in the course of review, it is found that the amount of money appropriated for any purpose is insufficient, right? The amount of money appropriated for any purpose is insufficient, or that the need has arisen for the expenditure for a purpose for which no money has been appropriated. So there are times when an appropriation will be made, a budget appropriation will be made, But as we go along in the year, we realize that the budget is not enough. It's insufficient. And so a supplementary budget or estimate has to come up. Or there are situations where as we go along the year, a need arises. A need arises to spend on something that is important. And so supplementary estimate or the supplementary budget has to be brought up. The Financial Administration Regulation allows for the raising of supplementary estimates in the course of the year. It is also known as revised estimates or budgets, right? So that's very, very important. You know what a supplementary supplements the main budget. It supplements the main budget. Section 35 of PMFA 2016, provision on supplementary budgets. Now, where in a financial year it is found that the amount appropriated by the Appropriation Act is insufficient or that a need has arisen, we mentioned these two things. Sometimes the budget or funds are the budget that was allocated is insufficient or a need has arisen, for which no amount has been appropriated by the Appropriation Act. The minister shall lay before Parliament for approval a supplementary estimate or a supplementary budget, right? So when there's a need or funds are insufficient, then the minister will come before Parliament for a supplementary estimate. And this supplementary appropriation will indicate how the supplementary expenditure shall be financed, right? Now, when the minister comes to Parliament and lays this before Parliament, lays the supplementary estimate before Parliament, he or she does so in the form of a supplementary appropriation bill. And this bill will indicate how the supplementary expenditure will be financed. Very, very important. It's also important to note that the appropriated budget of a covered entity does not include the supplementary budget of the covered entity. Very crucial, very important. Another thing that the minister also does is the minister ensures that the supplementary expenditure does not breach the objectives, targets, or rules set out in the fiscal strategy document. The fiscal strategy document would contain the fiscal policies of the government. So the supplementary budget is not going to, one of the things the minister will ensure is that it's not going to breach the objectives of that fiscal strategy document. Now, what are some of the reasons for the supplementary budget? What are some of the reasons for the supplementary budget? Like we've already mentioned, when there are insufficient funds, number one, and two, there are times when there's a need that arises. There's a need that arises, which cannot be postponed because it will not be in the public's interest. And there are situations where during inflationary periods, the cost of activities increases and therefore more money is needed to fund projects. Another thing is that on the revenue side, the supplementary budget is needed when extra revenue arose, which was not anticipated in the budget. So there are times when there are inflows that were not anticipated in the budget. They were not anticipated in the budget, and that creates the need for a supplementary budget. Now let's talk about the approaches to public sector budgeting or public sector budgeting system. And I think that's where we would end our conversation for today. And then we'll continue in another lecture. The FAA challenged the Ministry of Finance to develop a system of budgeting to be used throughout the public sector. Current budgeting system endorsed by the Ministry of Finance is program-based budgeting, which is a very clear departure from activity-based budgeting, which was used since 1999. Since 1999, the government of Ghana prepares budgets for a medium-term expenditure framework, which is a 3-year rolling budget, a 3-year rolling budget. So there are different approaches to public sector budgeting. You could have activity-based budgeting, you could have program-based budgeting. But the current budgeting system that is being used is program-based budgeting. The government of Ghana prepares budgets for the medium term. So we are looking at a 3-year rolling budget here, a 3-year rolling budget. Now, in our next lecture, we'll be talking more about the approaches to public sector budgeting, etc. Right, etc. So stick and stay with me. Thank you for listening to this lecture. If you haven't subscribed to this channel, please do so. And I'll see you in the next video. Thank you.